Hi, this is Chris Peterson with Brazos 1031 Exchange. And today we're going to go over the basics of doing a 1031 exchange. Specifically, we're going to cover who can do an exchange, what property works for an exchange, who can act as your exchange agent or qualified intermediary. We'll cover what the different types of exchanges there are. And we'll also kind of walk through the different steps in a 1031 exchange and talk a little bit about how you can get started. So the goal is just to give a broad overview of 1031 exchanges so that you'll be familiar with them and understand a little bit of the terminology and the process. And this should be particularly helpful for those who have never done a 1031 exchange before. So in a typical real estate transaction, we are dealing, for 1031 exchange purposes, not with the sale of a personal residence or homestead. What we're doing is selling a investment property or rental property. And so just to kind of walk through how that typically works is someone, if they're not doing a 1031 exchange, what they're going to do is they're going to have bought property at a specific sales price. So in this example, Joe Client has bought a property for $100,000, and that is his tax basis in the property. Now later he decides to sell the property for a profit, and so he sells it for $150,000. And so what he's going to have to do is pay capital gains tax on the difference between the sales price and his tax basis in the property. And so what that amounts to is he made $50,000. That's the difference between what he sold for and what he bought for. And so that is his capital gain. And so he's going to need to pay a capital gains tax on that $50,000. And so in this example, Joe pays 15% on his $50,000 gain, and so his tax bill to the IRS is $7,500. Now, if instead of doing a normal real estate transaction like we just described, he instead decided to do a 1031 exchange. So he still had the property that he bought for $100,000, he still sells it for $150,000, and he still had a capital gain of $50,000 on the transaction. But instead of just paying the capital gains tax, what he decides to do is he wants to do a 1031 exchange. So he's going to buy another property, which we call the replacement property. He's going to use the money from the transaction to pay for the new property. He's not going to pay any taxes at this time. So his capital gains taxes are deferred until some later time. And basically, instead of paying the IRS the $7,500 in capital gains tax, Joe is able to take that money and instead reinvest it and use it as equity in his new property, the replacement property. So who is eligible to do a 1031 exchange? Well, almost anybody who is the owner of investment or business property is eligible to do that. So it could be an individual or married couple. It could be a corporation that owns an investment or business property. Any type of partnership, whether it's a general partnership or a limited partnership, LLC, trust, or any other tax-paying entity. So any other taxpayer is eligible to do a 1031 exchange. So what property works? Well, it's got to be property that's used for a trade or business or for investment purposes. It can't be used for properties that are primarily personal use properties. So if you're looking to sell your personal residence, then you don't need to use a 1031 exchange. But if you are using or selling a property that you have used for investment purposes or for business purposes, then you can use a 1031 exchange and defer the capital gains tax. Now, the property must be like kind, which means that you've got to sell business real estate or investment real estate and buy other real estate that you're using for business or investment purposes. So you can't sell your rental house and buy a new personal homestead with it. So it's got to still be used for trade or business or investment purposes. Now, what specifically qualifies as like kind is actually a very broad definition. So the IRS says that like kind property is property of the same nature, character, or class, that quality or grade does not matter. Well, what this means practically is that most real estate will be like kind to any other form of real estate. So, for example, if you had an apartment complex, you could sell the apartment complex and buy a ranch as long as you were using it for investment or business purposes. You could sell the ranch and buy duplexes. You could sell the duplexes and buy vacation rentals. You could sell the vacation rentals and buy a blank piece of land that you're going to use for some investment purpose. So real estate is going to be like kind to other real estate. Now, there is some property that doesn't work, and so basically you're not going to be able to use a 1031 exchange to sell inventory and buy new inventory. You can't use it for any kind of securities or stocks or bonds. You can't sell your interests in an LLC or a partnership and buy another LLC or partnership. You can't sell your interest in a trust and buy into a new trust, and you can't sell your personal property and buy other personal property with it. There are some time limits that apply. So from the day that you sell the property that you currently own, which is what we call your relinquished property, you have 180 days to buy the replacement property. And in the first 45 days, you need to identify what you are potentially buying. So what that looks like in practice is most companies, including us, have a form that they will send you. And what you'll do on that form is list the legal description or the street address of the property that you're looking to buy. And then just return that form. And that is identifying the replacement property. And then you have the rest of those 180 days to go ahead and close and complete the sale of complete the purchase of the replacement property. The important thing to remember is that there are no extensions on these dates. They are hard and fast dates, so if it falls on a holiday or if it falls on a weekend, it doesn't matter. When your time is up, your time is up. The only exception to that rule is if there's a federally declared disaster in the area in which you're trying to purchase, and in those cases the IRS has to announce that there's going to be an extension of those deadlines. But I would not count on that, and we tell clients just count on there being no extensions. So once you sell your relinquished property, you have 180 days to close on your replacement property. So who can be an exchange agent? Well, you need to have an independent exchange agent or qualified intermediary, and that'll be somebody that is not involved in the transaction itself. So you can't act as your own exchange agent, your realtor can't do it, your accountant or attorney can't do it for you, you can't use one of your employees to do it, you can't use the bank that's financing for you to do it. You really need to have somebody that's independent who does it. And most of the companies will only act in one capacity, so like we will never act as the attorney and act as your exchange agent at the same time. We will only do one or the other. So what's a typical exchange look like? So a lot of times we'll do what's called a simultaneous exchange, which means that you'll have two closings that are on the same day, typically at the same title company. You still need to have an exchange agent involved, but basically what you're going to do is sell the relinquished property and then turn around and use those proceeds to buy the replacement property. And again, that transaction can occur all on the same day, but you still need all the same paperwork to memorialize your transaction as if you were doing it on different days. A deferred exchange is where you sell your relinquished property, and that is day one, and then at some time later, but before the expiration of the 180 days, you close and buy your replacement property. And so really the reason it's called the deferred exchange is because we're not doing it simultaneously. We're selling the property that you're selling, and then at some point in time later, we're purchasing the replacement property. And you need to have an exchange agent that is involved in those transactions. A reverse exchange is exactly like it sounds. We just do the opposite. And so in these transactions, there's more paperwork involved, but it allows you to buy a property first and then within 180 days to sell your relinquished property. A lot of times people will use reverse exchanges when they find a really good deal and they don't have time to sell their property before the need to close on the replacement property. So what they're doing is buying the replacement property first, and then within 180 days they're selling the relinquished property. Now, an improvement exchange is usually combined with one of the other exchange types. And so what we're doing is, besides just buying the replacement property, we're also making changes to the replacement property. So typically, that may consist of repairs or upgrades. So it might be buying a rental house and putting a new roof on it, and using some of your exchange money to install the roof, or maybe it's countertops or a new kitchen or a new bathroom, or maybe it's paint and carpet throughout the rental house. We also have done improvement exchanges where people have built on the property. So we've had clients that have sold a piece of property, bought a blank piece of property, and then have constructed a hotel, a restaurant, a house, an apartment complex on the replacement property. So what are the typical steps in a 1031 exchange? Well, the first is that you obviously are going to enter into a contract to sell the relinquished property. And usually what we suggest that you do is include what's called a cooperation clause, which just says that the buyer of your property is going to cooperate you by signing any documents that the 1031 exchange agent requires. And it will be at no cost to them. And so later in the presentation, we're going to look at some model cooperation clauses that you could use in your contracts. The second step is that the owner would retain the exchange agent, so in this case, Brazos 1031 exchange, before the closing. And so this gives us time to get with the title company and get all the documents that we need done. Then what's going to happen next is you will sign some documents to memorialize the exchange. Typically, those documents are signed at the title company while you're closing on the property that you're selling. So this is in a forward exchange, either a simultaneous exchange or a deferred exchange. And so you're gonna sign the documents that we supply to the title company, and you're gonna sign them along with signing the rest of the closing documents, the deed, etc. Now, step 4 is, instead of you receiving the money at closing, your exchange agent is going to hold the money for you. And so the title company is going to wire to Brazos 1031 exchange the closing funds, the net proceeds from the closing, and we're going to hold that money for you in a segregated trust account. And so the way that we set those accounts up is they are set up in both of our names using your tax ID number, and then that money is held in that separate account until you're ready to close on the replacement property. Now, since you've closed on the sale of your property, you're going to identify what replacement property you want to buy, and remember you have 45 days to do that. And then the property repeats itself. The process repeats itself. And so again, when you go to close on the purchase of the replacement property, then there's going to be some documents that get signed again at the title company, and you are going to sign those. Also, the seller of the property is going to sign some documents. So we want to have a cooperation clause in that contract as well. And at that closing, then the exchange company is going to wire your proceeds that are kept in your account, and they are going to wire that directly to the title company. And the title company is going to make sure that the deed to the property that you're buying is directly deeded to you. And at that point, your exchange will be complete. You're then going to report the 1031 exchange transaction. There's a form that gets attached to your tax return, and so you or your accountant will fill out that form on the tax return, attach it to your tax return, and send it in. And that form is due with the tax return for the year in which you sold the relinquished property. So just as an example, if you were to sell the relinquished property in December, then you're going to submit the form with your tax return for your transaction when your tax return is due. So like for December of 2018, if you close in December of 2018, the form and is going to be attached to your 2018 tax return, even if you end up buying the replacement property in 2019. So how do you get started on an exchange? Well, the first thing I would do is to just give us a call. I like to be involved in transactions as early as possible. So if you put a property, if you have your property go under contract, you're going to want to get with us either before you put it under contract or as soon as you put it under contract. That gives us time to coordinate with the title company and with your realtor, with your attorney, with your accountant, whoever is going to be involved in the process. And so before the first closing, you need to contract with the exchange agent so that they are available to serve as the qualified intermediary. If you wait until you have closed on the property, then you have missed your window. So you have to do it before you close. And like I said, I strongly suggest that people add cooperation clauses into their contracts. And so that's also a good way to kind of give everybody the heads up that you intend to do a 1031 exchange. So the next couple of slides show typical cooperation clauses. So the first one is a cooperation clause that you can use and you're free to use in your sales contract. So all you're asking the buyer to do is to acknowledge that you're going to do a 1031 exchange, that your exchange agent is going to be involved in facilitating the exchange, that the buyer is going to cooperate and sign any documents that are necessary, but there's not going to be any additional cost or liability to the buyer for doing that. So they're just doing it as a courtesy, but they are still required to do it under the contract. Then this is a cooperation clause that can be used when buying. So when you're going to buy the replacement property, so again, what you're telling the seller is, hey, I'm doing a 1031 exchange. This is who's going to be facilitating the transaction, and I'm going to need you to cooperate by signing some documents to help me in my 1031 exchange. But again, it's going to be at no cost or liability to the seller. So I hope you find that information helpful. Again, it just serves as a broad overview of 1031 exchanges. What I encourage you to do if you have specific questions is you can check our website, or you can check other videos that we have posted online, or you can give us a call. So we are physically located in Texas, and so you'll see the 979-589-4398 number is our Texas number. But we also have a toll-free number because we do 1031 exchanges throughout the country. And so it doesn't matter whether you're located in Texas or whether you're located somewhere else. It doesn't matter where the property that you're buying or selling is located. We can help you with transactions across the United States. So please give us a call if we can be of assistance, and I hope that you have found it helpful to learn a little bit about the basics of 1031 exchanges.